The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on the health hygiene platform. So we have seen companies report slowdown in the past few months. So I wanted to understand if 100 was the base day in Q2, how is the industry or your numbers shaping up in the health and hygiene, sanitizer, wipes, and all those products specifically for the COVID response?
Yeah, hi Avnish. Sunil here. Yeah, so the way the hygiene category is going, first of all, within hygiene, there are multiple formats. So I think that itself, there are, differences between the way formats would be moving. So the bulk of hygiene category is obviously hand hygiene. And that's one of the categories which has seen the most traction in both soaps, which is itself the largest component of hand hygiene still in India and will remain so, and hand washes. And then there have been the new categories which have been emerging over the last 6 months thanks to COVID, which are things like disinfectant sprays or let's say, room freshener sprays, which are more, hygiene related. So I would put this into the two parts, that there's a core hand hygiene and there are maybe just new categories which are emerging. Now the way it's happening is we are seeing in hand washes itself, the penetration of the category has changed pretty fundamentally over the last 6 months, thanks to this whole outbreak which has happened. The category penetration of hand washes in India is roughly gone up by 1.5 to 1.7 times. And that is the kind of traction which is happening in the category. It is happening both in urban and rural. In terms of soaps, which again is seeing a very significantly decent consumption increase and traction, it is primarily because of, I would say, two reasons. One, yes, maybe more hand washing is happening. And secondly, maybe people are taking more precautions and protection because of extra bathing, which may be happening as well. This put together, I would say hand washing, 1.5 to 1.7x. Soaps, obviously, the 100% penetrated category, it is seeing a consumption increase. So I think this is happening. The third part, which is the new segments emerging, they are very, very small right now. And I would say it's a little too early to call as to where will they stabilize.
But you are not unduly worried on the third part?
Okay, it is difficult to say where will it stabilize, but yeah, I would put two categories which are maybe emerging more in this COVID. One is sanitizers, which otherwise was always a very, very insignificant category in this country. The one which is, and the second one which is newly emerged is the disinfectant sprays. I think they are both very, very small in the larger scheme of FMCG overall hygiene itself. My feeling is what will happen is that we may have seen a very, very abnormal spike in the last 6 months in these two categories. They will definitely come down very sharply. They have already started coming down sharply. But the good part is that if they were completely marginal and negligible, I think they will settle down at a space that they will have a reasonably decent threshold level in the country. So hence I'm not too bothered, because in a pre-COVID period, they never existed in this country. So even if they stabilize at a reasonably lower threshold level than the spike, I think they will start becoming meaningful categories for the future.
Right. My second question is on distribution. So in Kirana, clearly customer is relying much more than pre-COVID. So there is more products being catered to by Kirana versus earlier, non-FMCG including. And within FMCG, every company has come out with 30, 50, 70 new products. So, this is leading to FMCG companies rationalizing their portfolio because you have less shelf available. So how are you addressing SKU rationalization? And on the other hand, new products which you have also launched, plus now slowdown are happening in some of the new products. If you could discuss that part.
Okay, so actually I'll again handle this in two parts. So one is that in any case, the Kirana, the whole GTM in India was pretty much operating in a very, very, I would say partially broken system till let's say 2 months back, right? Modern trade, for example, is still to come out of the structural changes it has seen, So in this time period, obviously, general trade and e-commerce are the two channels which have really got the boom, And general trade more because I think of their own entrepreneurial spirit and the way they responded to the needs of the local neighborhood. Now, coming to your question, yes, there have been a flurry of, NPDs which have happened across, many portfolios. What will happen in this, that there will, again, maybe a 80-20 or a 70-30 principle is shaping up. That you'll find maybe 70% of the traction is coming out of 30% of the launches, or a one third of the launches. And I think those are the ones where the further investments are going to go. And that's something which is even the way we are also seeing prioritization, that yeah, there are some which are really, really stabilizing to a decent threshold level. There could be categories emerging for the future, or in some of the cases where the categories pre-existed, you see that you start getting some threshold level of base. I think we will all be prioritizing in that 70-30 ratio in terms of categories. And hence, those will also start showing in as GT Kirana opens up more and more in a more formal way like earlier. You'll also see the shelf space will also start getting distributed in that way. So I think that is one principle which is panning out. The second piece which is happening in terms of SKU rationalization, I think this is an exercise which we in any case do once in 2 years otherwise also. But yes, having said this, I think we have actually ourselves also gone through this exercise in the last 60 days again, because this COVID also made us step back and say, okay, are there any SKUs which are or any products which may not be required in the future new normal? And we have done some SKU rationalization where we have decided to do a tail that we thought that was not going to be relevant anymore. So I think these two pieces are the ones we have taken charge on.
So thanks, Sunil. That was quite helpful. I'll come back to you. Thank you.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Sunil, hi. Manoj here. Hello, sir. Actually, good afternoon. Sunil, Samir, hi.
Hey, Manoj. Yeah, Manoj.
I don't know, I just got a cough from somewhere actually. Hopefully it's not something very serious. Okay. A couple of questions actually from my side, which is more of from a clarificatory nature. One is that when I was listening to Sunil in some of the other public forums, media, which he was presenting, I remember Sunil, you spoke about the changes which is actually happening in the GT distribution landscape, and how companies like you, which are actually market leaders in certain categories, could take advantage of. I remember one of the statements you made that let's say GT today could be servicing a larger area than what he was doing previously. So that's question number one. Just some clarification comment from your side for the larger audience. That's point number one. Point number two, on the HI business in India, specifically, what I find is that while there is a general consensus that health and hygiene habits which has changed in the last 9 months, let's say hand wash, for example, is something which is sustainable into the medium term. But I'm not sure whether, let's say from an investing community point of view or the consensus point of view, is it appreciated, well enough that, is this something which is a template to be applied even for insecticides in India? For example, as a consumer, if I had actually used, mosquito repellent for more number of hours and in more number of rooms in the last, 6 months, is it something sustainable? Basically, has the, consumption habits changed in insecticides fundamentally? That's the first two questions. Okay.
So now let me take the second one question first, and then I'll come to the GT one. Okay. So obviously, while I think there's one change which is definitely happening in the new normal is that overall, I think India and Indians now would be much more health conscious than we were ever before. See, as a country, as a society, we have never had a very great sense of, civic sanity. And that's something, unfortunately, the way our country has evolved, the way our society has evolved. In terms of health also, we tend to take a lot of things for granted and say, okay, it is more a reaction action that will happen from us rather than any proactive moves which will happen. So I think there's one overall theme which is irrespective of category which is happening is that there will be more proactive sensitivity towards health by and large. Now, obviously what we are seeing right now in this template and what we have experienced the last 8 months is something which is led by a lot of panic. I think that's something which is there. And hence, I don't think that this template of panic-led proactive actions apply to HI per se. I don't think so. That's something which as a template would apply to HI. What could apply forward? And I'll tell you, there's an action which we need to take from our end to leverage that. So what could apply is that if earlier, let's say on a scale of 10, Indians' attitude towards proactive health conscious was, let's say 4 on 10, my feeling is that's moved to a 6. Now that's a window of opportunity for all players which play in the health segment. And in that sense, HI is all about vector-borne diseases in this country. So that is actually a category which lands bang in there. Now, having said this is not something where the template will suddenly start playing out overall. What we'll have to do, obviously, is keeping this backdrop in mind, we'll have to obviously create levers for category growth. So just give you an example, one data I can tell you is that even in this COVID time, the HI penetration in the country in last 6 months has jumped significantly. if that is any indication. But that is, I think, because at this time that lot of this preventive panic-led actions happened and everybody obviously wanted to be wary of any kind of disease at that time. But I think this window, since it comes our way, we have to back it up with products which will drive category trials because we are the category leaders. So that's a window of opportunity which I think comes our way. So that is one area we will be very focused in. Secondly, there is clearly a window of opportunity coming our way in terms of launching products which are seen as much more efficacious and drive premiumization in the category. So I think in the backdrop of this, these two are the levers that we will be focusing on. And I can talk to you on this a little bit right on this question. We are very clear that category trial generation responsibility lies on us as a leader. And we know this category has its own seasonality. Those are separate challenges altogether, which we can't wish away. But we are working, and in a matter of maybe next 6 to 8 months, we would have one or two very, very, disruptive launches, which we believe can help us accelerate the category trials, new trials further. That's one. And the secondly, two launches which I can talk of, which we have already done, one is this GK Gold Flash, which is a premiumization and upgrade opportunity from the coil and the burning format, which I think is a piece which is working very, very nicely for us. And the second one, which has just rolled out, which I am pretty bullish about, is a product called Godrej Smart Spray. And this we may not have shared right now too much publicly, but I can talk about it at this forum, is because we've just rolled this out around 30 days back as a test market in Andhra Pradesh. And let me tell you about this product for the benefit of all the audience here. It is a product which, in my mind, and from all our tests, is maybe the only comprehensive, complete solution of HI which ever exists in this world. It is a spray which is a no-gas spray. It has no gas into it. It's a non-gas formulation. It is instant like any other spray, so it gives you SOS solution. But like any other SOS aerosol spray, it has a 8-hour longevity. So it actually combines the longevity of an electric format or a burning format and the instancy of an aerosol, and all this comes in a no-gas formulation. So this is a pretty disruptive product that we have launched, and we've launched it under Goodnight brand and not under HIT. So this is our first Goodnight formulation which comes under aerosol, but it's a non-gas formulation. So this kind of product, I think, can seriously lead to a very different consumer behavior in upgrade and premiumization. Now, coming to your second question, the first question, which is the GT behavior. What I mentioned, I know, Manoj, what you may be referring to, when I said that the GT is going to see a expanded coverage. You know what I see? One big change which has happened. The piece I was referring to was that definitely there's an omni-channel piece, which is a very, very large piece shaping India right now. It is also one of the most confusing and flux pieces that we are seeing. It is changing by maybe every 6 months. There are too many, boundaries of traditional channels that we had all lived with. For example, this is modern trade, this is GT, this is e-com. They are all blurring. That's why it's being called omni-channel. So what is going to happen is, let's say the example of, for example, Dunzo. If earlier a neighborhood kirana was only servicing a catchment of, let's say, 1.5 kilometers to 2 kilometers at best around their outlet, and that's the neighborhood catchment that neighborhood kirana knew very well in terms of consumer preferences, inventory assortment, credit servicing, home delivery, everything. That was their business model. With things like Dunzo happening, Swiggy, Zomato as last mile delivery happening, we are very clearly seeing that the opportunity that GT is grabbing is that for that entrepreneurial kirana wala, his catchment is no longer 2 kilometers. The catchment is suddenly maybe become 7 to 10 kilometers also. And the planogramming of the store is changing completely. If earlier it was an assortment of which catered only to the neighborhood kirana of, let's say, maybe 300 different items, suddenly we're realizing that there's a premiumization in that assortment happening because his boundaries are expanded. So I think this is a very, very interesting change which is happening in urban GTM, where the boundaries and the opportunity for a kirana are going to be not limited by the physical distance of the catchment.
Thank you. The next question is from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi, Sunil, and thanks for taking the time to speak to all of us. My first question was on the ProClean platform that you have launched in the middle of COVID. So actually two subparts to the question. One is, was it driven by COVID or was it something that you were already planning and working on? And secondly, in the past when GCPL has innovated, it has been based on some kind of a product differentiation which gives you a product advantage. Here it seems a little bit more of mainstream what is already there in the market. So just I wanted to understand your thought process. Is it that you could become a number 2 player in the longer run here? You have strong incumbents but no maybe strong number 2 player in some of these categories? Or do you think is it a platform where longer term you will have differentiation on product also?
Yeah, no, I think it's something, a question you're asking about a format that we are pretty excited about. So that's, I think, and good to know that you are also having excitement about this format. So no, the question for us that both these formats, in ProClean we have launched, if you see, we have entered floor and toilets as the two segments. And I can tell you, interestingly, we did not do it under Protect because we see Protect as a home and personal hygiene brand. So we have extended Protect to a home and personal hygiene brand, but we have kept toilets and floor part of home out of it because we thought that brand stretch requires a very, very different kind of efficacy and very different kind of brand itself. We had evaluated both these categories as part of our long range planning exercise around 9 months back itself. And we had seen that these categories were growing pretty healthily in the country, even during the slowdown of India. And they were both low penetrated categories in India. That even though there have been incumbents who have done pretty well, overall penetration in this country was still low because there's a large unbranded play which exists in both these categories in the shape of Phenyl, etc., or maybe price warrior local players. So that's what this category attracted us. Having said that, we always, when we enter the category, you're right, we normally come through a really strong, serious product disruption. When COVID happened, we were already working on some products, but we decided that there was definitely this a time to make a entry and take a threshold level space in this category, even though products may not be highly differentiated. So that's something which we preponed. So hence we have launched this product because we believe that even if they are not fully differentiated or highly differentiated right now, given that the category has a huge penetration headroom to grow, the category has only maybe both categories have maybe one very large branded player and no strong national, strong brand which has trust behind it as well as distribution might behind it. We believe that even in this case, we can grab a reasonable level of threshold market share. So I think that's the way I would answer your question. Having said that, we are very clear that our DNA is innovation. So we will parallelly keep on working towards, and we are currently working as part of any other category that we see, that are there any disruption opportunities in this format also from product angle. And that's something which is a work that we hopefully will continue to do. And if things work out, maybe in a matter of next 12 months or so, we could have some differentiation coming through in this category as well. But yes, this category very clearly, we are seeing good early signs. And we believe this category is actually not, while it got heightened during COVID, it's a category which will not dip post-COVID because it has got, its own COVID agnostic headroom to grow. And hence we believe this is a category to really invest in the future. And what these categories do to us is a point, maybe larger point I also want to put here is that we have very clearly in our LRP also said that we want to start having a much more diversified portfolio to leverage our business. So what these categories do along with the other work that we've been doing on Protect is makes us a much more diversified home and personal care company. And that is a very strong intent that we have put on the table. And I think ProClean and Protect both really help us do that. So clearly we will be investing behind that. And apart from this, if you combine these two formats along with our continued thrust behind air care and fabric care, it just makes us, the personal vision for us is we will be a very different home and personal care company with presence across maybe 10 different segments than what we were, let's say, a year back, where we may be limited to, let's say, four segments. So that's the way we see ourselves.
Yeah, thanks. That's very clear, Sunil. And my second and last question is on hair colors. This is one segment where growth has been very erratic. We have seen some good quarters followed by some bad quarters. If you could just throw some light on what's happening within the category, the different moving parts between.
Are you talking hair or air? Sorry.
Hair colors. I'm talking about hair colors. Yeah.
Okay.
That why has the growth been a bit erratic? Is there some changes happening within the category? Why is it not structurally growing as it was expected to grow? And therefore, how do you see the future for you going ahead here?
Okay. So if you see the last 9 months, obviously this category has got impacted because of the discretionary nature, right? Otherwise, the way I see this, prior to pre-COVID, pre-April, yes, the category actually had, in fact, 2 years back, this category already had grown at around double digit. Then the year 2019, what happened during this year, this category saw a slowdown, but that slowdown was nothing to do with this category alone. It was the way all of you guys have been tracking that the whole Indian FMCG went into a serious slowdown, led by primarily rural, and even urban came under pressure. And the way GDP came down, crashing from 8 to 3 during that 4 quarters, the FMCG saw a fundamental slowdown, and this category did get impacted, but the same stress was visible across all other categories. So I would not pinpoint anything which was only an outlier for this category. That's one comment. Obviously, now in the last 2 quarters, what's happened is that all discretionary categories have completely come off the racks, because the fact is the whole focus was towards prevention and hence essentials. So they got impacted both from supply chain as well as consumer demand point of view. What is the good news for us is that in the pre-COVID period of, I would say, the 2 quarters pre-COVID, we were seeing huge traction happening in our hair colors business thanks to some of the marketing interventions that we had taken. And we were seeing a very, very sharp market share gains which were coming our way and reflecting also in our core business of hair colors as well. So I think we were actually on a very positive trajectory, and we really I was personally pretty disappointed that COVID happened in between, that it, in a way, almost, kind of disrupted some of the brilliant work that we had started seeing results from. We had also launched shampoo hair color during the same last 2 quarters pre-COVID. So a lot of our hair color pieces actually had started gaining traction. What has happened now, the positive side post-COVID, is that I personally expected this category, which was tracking negative, like any other discretionary categories, it has gone into a negative growth, and the penetration had also fallen. I expected it to take some time to recover. I was myself mentally prepared for saying, okay, this is going to be maybe a post-COVID 6 to 9 month kind of a recovery. What I'm very surprised is the kind of recovery that I've seen in hair colors in the last 3 months. And I'm being candid here that I never expected this recovery. It has been very sharp. I'm still not very sure that this sharp V-shaped recovery that we are seeing in hair colors is actually going to take, but one thing for certain is that it is not going to take 6 months that I earlier thought. So I think I'm clear on both the sides that this recovery is here to stay, and maybe we are going to see a much more faster bounce back of discretionary. But I would wait for a little bit more time to see how the recovery shapes out. Having said that, the good part is the 2 big, pieces that we had put into play in the last 2 quarters of 2019, which is the new marketing mix of Godrej Expert Rich Creme, the launch of shampoo hair color, and the way they were playing out very positively for us. I think we are seeing again they're continuing from where we left them off, and that's giving us a very healthy sign. It's also showing in the way our market shares are going from strength to strength in the last 6 months. So I'm pretty positive about hair colors right now. Actually, I'm pretty happy about hair colors right now.
Okay, thanks Sunil so much, and all the best.
Thank you. The next question is from the line of Alok Shah from Ambit Capital. Please go ahead.
Yeah, hi Sunil and Samir. Good afternoon. Thank you for giving me this opportunity. I had a question. So most of the FMCG companies, especially in the health and hygiene category, have launched a lot of products. But at some point in time, most of the companies will take a call. This is technical. This is structural. So if you were to call out some 2-3 brands or categories in which you are ready to pick up the battles, sustainability, and do a lot of disruptions and innovations, which would be those 2-3 categories and brands? Thank you.
Yeah, okay. So I think in a way, to earlier question also I talked about it, but I'll reinforce this answer here. I think very clearly, as I said, that while many of us would have launched, many multiple hygiene products during the COVID frenzy, clearly the 70-30 ratio is playing out. It will play out. So finally, I think the categories which will be the long-term categories within hygiene space for India, one is very clearly going to be hand washes. I'll give you a data also here, and this is something which I can tell you very interestingly. Hand washes have been in India for around 15 years now. The penetration in 15 years moved from 0 to 19% as a category, okay, overall, and all led primarily by urban. And this is despite the might of everybody, And what COVID has done, it has taken the penetration in 6 months from 19 to 34%. Now that's a fundamental disruption of this category which has happened, and maybe that's one silver lining out of that it is actually led to a fundamental habit change. Now, even if, let's say, it doesn't sustain at 34, it comes back to maybe a 30 hypothetically. The great piece is it would have taken us maybe 5 years to move from 19 to 30. So in a way, what it has done is it actually short-circuited the 5-year curve of hand washing in this country. And that is one category which is definitely now going to go from strength to strength, because even if it's, let's say, over the next 3 months corrects to a 30% penetration, there's still a huge headroom to grow in this 30. I mean, you're talking of, still maybe another 30 to go. Because you normally start seeing categories getting into slowdown once they are a 65% penetration or so, right? So that is one category which is here to stay. The good part for us is that we have got a disruption in this, which we had launched 2 years back itself, which is Godrej Protect powder to liquid hand wash. Now this is a brand which has seen a huge traction, expectedly, like most hand washes brands. But what it has done is that it is occupying a very sweet spot. That there is no 15 rupee hand wash available in this country. The only thing people use other than the hand washes for cheap solution today is soaps. So do you have a 10 rupee soap in the market? And that is what obviously a very large segment in this country. Now, this is a very, very easy price point to shift over and upgrade from a 10 rupee soap to a 15 rupee powder to liquid hand wash. And this is where we have a head start. I can't disclose the shares right now, but we are seeing some very good, strong volume shares that we have gained in this segment. And here we would like to see volume shares, because we are obviously priced at 1/3 of the normal hand washes. We are 15, the other hand washes are 45. So what I'm interested in is tracking my volume hand wash, because that's what matters here, as to the number of homes I'm reaching. And my task here would be to actually drive penetration in this category. If market share gains happen through conversion and downgrades from other hand washes, that's a secondary task for us. That happens. Our eyes are not on that. So I think this is one category which stays. Secondly, I believe that another category which is going to evolve going forward in the hygiene is, I think the pieces on disinfectant spray, I think this is going to be a niche premium category which will evolve, I think, primarily through e-commerce and modern trade. I don't expect the frenzy to sustain. I expect it to come down, but I think like the way aerosol category has emerged in HI, I think this is an aerosol category which will emerge at a premium end of hygiene through premium niche channels. So I think that's another play which will happen. And the third piece, which I think we talked about, this is where I think Protect comes in, obviously. And the third one, which I think has seen a huge frenzy during COVID, but which I think the category which is COVID agnostic are the toilet and the floor cleaners, the home hygiene category, which is where I think will play through ProClean, as I talked of internally. So I think between Protect and ProClean, the good news is we want to, I see us playing in 5 more home and personal care categories. Obviously all by and large between home, personal and home hygiene. But what it opens up a window of 5 more categories for us, and which will keep on disrupting, and we have our own might of both distribution and brand building on which we'll ride. So this makes us very, very excited. This also makes us very diversified.
Thank you, Sunil. That was really helpful.
Thank you. The next question is from the line of Harit Kapoor from Investec Capital. Please go ahead.
Yeah, hi, good afternoon. Just had 2 questions. Firstly was, on the, urban and rural mix. So, you've launched a range of products. Most of them are, probably catering to urban, to the urban middle class, kind of market. I just wanted to understand, historically GCPL has had a slightly lower share of their rural portfolio at about 28% of India business. Do the categories that we are looking at into the future, mean that this ratio probably will not go up, probably to 30-35% levels? How do we see this kind of mix moving? The reason I ask is because even over the next 4-5 years, the expectations are that rural should do better than urban. So that's the context.
Yeah. Okay. So there's 2 things again maybe we're panning out. Yes, there are some of these hygiene categories that we're talking about. Let's say the toilet cleaners and the bathroom cleaners. They're obviously urban skewed, right? And actually, the question there is that the penetration of the category is so low in urban itself that itself will see a huge amount of growth. But having said that, there are 2 or 3 interventions that we are doing which are very, very rural focused. The one big one which is I just talked about is the powder to liquid hand wash, which is a 15 rupee hand wash. There the entire focus is to upgrade the 10 rupee soap. And 10 rupee soap is a highly skewed and highly penetration category which is led by rural in India. So that's very clear. The most of the soap market, it's roughly around a 60-40 ratio between 10 rupee soaps and the larger soaps in this country. And that 40 itself is skewed towards the lower tier and the rural part of India. So I think powder to liquid task is very clearly to teach hand washing to the rural India and to upgrade the soap users. So that is one big bet for the rural which is happening. Secondly, as I said, in the HIPs, that we are looking at some disruptions over the next 12 months coming. While I've talked of the Godrej Smart Spray, which is completely urban and completely premiumization story, a very big one for us. I think there is a couple of innovations that we are working on and pretty close to hopefully we should be able to tell in the next 3 quarters or so, which are going to be only focused on driving new trials in HI to from new trials to the category, and they will be largely rural skewed. So I think in my portfolio, what is happening is I think there's going to be a balance of both happening. I would not say that we are going to be launching products that are skewed towards rural. I think we're going to have a balance of both. Hence, I see maybe over a 5-year period, our aspiration would be to take 29%. We are around 29 odd this year. Take 29 to maybe a 34, 35. I would say that would be a 4 or to 5 year horizon for us. But yeah, I think we'll have a balanced attack on both urban and rural.
Right, sir. The second question was on the soap side, specifically on number one. In the last 6-9 months, my initial expectation was that number one might suffer a little bit given the increased focus on hygiene and some of the more germ protection led products will or number one could actually lose some share. But over the last couple of quarters, even you've actually done quite well while you've gained share from smaller players, regional players. How do we look at the number one performance going forward over the next 12-18 months? There are two aspects. One is that consumers normalize their purchase to a product like number one from a germ protection, but on the other side, even the smaller players are coming back. So how do you see this headwind, tailwind combined? How do you see the growth trajectory expected?
Okay, so let me tell you what's happened in the soap piece. So I think the number one story, first of all, is not a COVID story alone. If you see the last two, and soap business, as all of you know, has its own cycles, it can see commodity bull runs and it can see some of the commodity come down. And that obviously has very clearly, given that it's a 100% penetrated category, it has this whole linkage to, the up and down of price warriors, which does happen, the local players. So that does play out, in the category at all. And we are now used to those cycles and we know how to navigate those cycles. They're kind of a playbook there now, Now, what has happened even in the 2 years pre-COVID, when there was the soap segment was seeing a slowdown in line with the FMCG slowdown, number one as a brand kept on doing the right things. And one of the pieces which has worked for number one is this whole approach that we have adopted as a company called CMM, or what we call, micro marketing initiatives, so consumer micro marketing. And that is the culture which I think has got ingrained in our thing, which means that we today execute our strategies. And this is not only for number one, we execute our strategies at what we call at the DDR levels, or the dynamic district regions, which Nielsen gives us. And our plans are very, very varied at a dynamic district region level. This paid off us even in a pre-COVID when for 2 consecutive years we kept on increasing shares. So number one was already at an all-time high share before COVID happened. And then what has happened in COVID is something which I never thought I would see in my lifetime happen to soaps, because I always used to joke about with the marketing team that I don't think so we can make India bathe more, maybe it's been always very tough, and I don't track oral care, but you guys would know that it's been tough to get India to do toothbrushing twice, So I said, hum 2 baar to nahane ke liye force nahi karte hain, that's going to be a longer haul. But what COVID has done, and I know this will not sustain, but I think it will sustain to some extent, is it's taught India to maybe hand wash more. It is obviously teaching India to take maybe bath more. While I think some of this will go away, but I think some of this hand washing habit will stay. And hence, I would like to say one thing, that one misconception which at least I don't have in my mind, that in my mind, when we talk hygiene, the biggest hygiene category in this country is soaps. While we will be investing in hand washes and the task of powder to liquid hand wash, growing hand wash penetration from 30 forward is safe, but the fact is, a large part of India will use hand washes, soaps for hygiene. And that's a brilliant context to be in. Now, number one, since it was placed at a very, very strong position because of high market shares, when this hand washing has panned out in soaps also, I think we had been, and plus with combined with the CMM activations, which we did not let go down of during breakdown also. And that's a compliment to our marketing and I think the sales team, what they did on the ground. We have seen the benefits coming out too very, very sharply in terms of number one. And I would say while number one is being talked of here, I think a very untold story in our soap portfolio is Synthol, which is the premium end of portfolio, which also has been gaining steadily for last 3 years. From share to year, we have been gaining strength in both actually, both at premium end and at the sub-top end. And we have seen the gains happening in both Synthol and number one very strongly in the last 9 months. Where we left it off pre-COVID, the category tailwinds have benefited us and we have taken advantage of that. Now, another piece which I can tell you on this germ protection which has happened, and I can tell you one piece which is missing also in my soap portfolio, which I'll talk it and let nobody's asked it. When this COVID happened, I also feel that while WHO has tossed Indians, and actually maybe not Indians, globally everybody, that any soap is good enough for germ protection. So what has happened there is that initially while they may have been a frenzy towards health soaps, people over a period realized that, hey, every soap is good enough to take germ protection. And after maybe 3 or 4 months, people have made sure that they come back to their original brands. So I think that's also playing out. Having said that, we still believe health soap is a segment we need to invest further on. And that is where we have now doubled down on investment behind 2 parts of our portfolio, which is one, we have launched a Synthol health soap at a premium end, which we believe will take time, but will be at it. Because that segment I still believe we have opportunity to grow. We are weak on that. And the second one is protect health soap. This, don't expect magic in soaps to happen overnight. I see this as a 3-year journey of health soaps. So we continue the great work that we are doing in number one. We continue to do the great work of Synthol Line Fresh and Synthol Original, which are very strong portfolios. And we start building the Synthol Health and the Protect Health soap. It's a 3-year journey. I know how soaps work. You have to be hell of a lot of patience in soaps. But I think that will make us a very, very complete soap company in that sense. And I don't see it as soap. I think when we talk hygiene, India's hygiene starts with soaps. We shouldn't forget that.
That's very clear. Thank you so much. That's it from me.
Thank you. The next question is from the line of Akshay Thakkar from Fidelity Investment. Please go ahead.
Hey, hi. Thank you so much for taking my question. Just a very big picture question. I don't know how does the board evaluate your performance? Maybe if you could just speak a little to over the next 3 to 5 years, what are the areas that the board or Ms. Abha really wants to have a focus on you, and then obviously you would have formulated a plan to achieve whatever qualitative, quantitative numbers that are set out in front of you. Could you just help us maybe understand a few markers that you have along the way? Is it market share gains? Is it new product development? Just generally, what's your dashboard on decision making looking like? That was one question. And the second question really was that you touched upon that NPD with not all products will go up, but the ones that will succeed, given that the kind of markets that you entered in are fairly large, right? So you had a very good success track record in some of the past NPDs. So just generally in terms of sizing, can these new NPDs, if and when they are successful, be as large as, let's say, air fresheners and sort of car fresheners was? Or is the size of price a little lower in some of the new NPDs? Just wanted to get your thoughts on these 2 questions. Thank you.
Yeah. So let me take the first question. So I think clearly the performance parameters, the dashboard that we get evaluated and where I personally evaluate myself first as self-reflection. I think very clearly it's the portfolio growth, I think, I think it's the growth in terms of quantity. And I think the second one, which really for me is important, is the quality of growth. And which is a piece of how you're, because what will happen in any company is that finally there will be cycles when one category will go through some rough patch, the other will go through a up. And I think for a sustainable growth, and at my level, it's all about looking at a sustainable growth and not living only from quarter to quarter. And that's, I think, what all of you are also interested in when you look at us from investment point of view, is what is the sustainable quality of growth that we are building for ourselves. So that is one benchmark, apart from obviously delivering, short-term results, which obviously goes without saying. So that's the one piece. Second piece, obviously, is that wherever you're category leader, your task will be to grow the category. Wherever you are not the category leader, your task will be to gain market shares. So I think that's the second piece I would put as a second part of the dashboard. And the third important piece is obviously the margins and the health of the business in terms of profitability and, parameters like, return of capital employed or the EBITDA margins. That's the third piece. And the fourth is the bench strength and talent. Like what are you building in terms of talent pipeline for the future across? And this is very critical because what obviously all of us seeing across is the changes which are happening in India right now are, I think disruptive itself is an understatement in my mind. And I'm talking even pre-COVID, that this omni-channel has maybe got a wind of its own thanks to COVID, but it was happening or about to happen in this country anyway, right? So omni-channel is throwing out all the skills that we made or learned in the past. So hence the talent becomes very important from the future, ecosystem structural changes. And I think that's the fourth piece of the dashboard which I would put. So I think from these are 4 parameters I think which we talk when we converse with the board, and this is something which I look forward when I talk to my own teams and when I self-reflect. So I hope that answers your first question. The second piece on this NPD pipeline, yes, I think we're a company which has innovation in its DNA. In past, we've seen almost 1/3 of our growth have always got driven by what we call as NPDs, which is a 36-month cycle from launch of a product. And these new categories that we launched, I think the beauty of these categories is that they're all pretty much under-penetrated or less penetrated categories in this country. So toilet cleaners and floor cleaners both would be in the range of, although I don't have exact figure, but anywhere between 15 to 20% kind of penetration, which is very, very low for a nation of our size. Similarly, if you see hand washing, I just told you it's moved from 19 to 30 thanks to COVID, a brilliant head start which has happened, a brilliant habit change which this country is seeing. So now it is up to us as players to really, grow this category to from 30 to 50 over maybe next 3 years, So I think all these categories are, really, really, I would say, fertile grounds to do disruption. And in each of these, hand washes, we've already done the disruption. In each of these, while we are starting off with some of these as maybe, not so differentiated products, we will be very clear that we will go ahead and play some disruptions going forward. So you will see that's how we'll play all these categories. Given the size of these categories, actually these categories are not small at all. Floor cleaner and toilet cleaners are all in the range of around 1,500 crore plus categories. Now that's a very, very large category. Just to give an example, air care in this India is 700-800 crores. And if you've seen that there where we have got market leadership or close to market leadership in the last 2 years and built a brand which is, maybe a 300 crore plus brand, just imagine if we enter a category which is 1,500 crores, and I understand there may be market leaders sitting with 60% market share there, so we are not going to take it lightly. But a 1,500 crore category sitting at a 20% penetration with one single player of 60% market share, if a disruption can be done there, I think you can get a better category than this. So I hope that we will be able to come with disruptions as well as use our own strengths to carve out, yes, strong, meaningful NPDs in this as well, which will be sizable. I am very clear that we are not entering these categories to create 50 crore brands.
Okay. Thank you. Thank you for that.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah. Hi, Sunil. Thanks for the session. My first question was on the distribution side. You a couple of times mentioned about how e-commerce is going to be important, and you talked about omni-channel as well. But just specific to e-commerce, how are your market shares tracking for the core categories here? And how do the unit economics for this channel today behave versus general trade? And considering a lot of your premium new launches might be over-indexed to this channel, at least in the beginning, how do you see the margin profile here panning out? That's the first question.
Yeah, okay. So that's a very interesting question, which is a topic for a lot of debates within our organization. So thank you for asking me this. So I'll be pretty candid on this. So first of all, I tell you our e-com journey I'm breaking into 2 parts. I think the last 2 years a piece, which is when we have started on our e-com journey very seriously. And there is one call that we've taken, which whenever I benchmark with some of our very, very sterling peers, who really do some great work, and we benchmark with many of them as well, is that we are the only company which has taken a call of not putting e-commerce under sales. So the reason we have done that is that we don't see this as a channel in the future. We see this as a business which encompasses a comprehensive thinking of the entire consumer journey. So that's one basic principle that we put ourselves, that e-commerce in future has to be seen starting first with consumer, and then the channel piece of fulfillment plays out from there. While most companies have seen it as a channel of fulfillment or last mile delivery. What this means is that in the last 2 years, while we have been putting the basics into place, and the intent was to just maybe do a bit of catch up with some of the people who would have been ahead of us, we have created a team which reports directly to me. So we have a business of e-com which reports directly into me, which is the CEO of India and South. And we have teams in the e-commerce of both marketing, supply chain, key account management, as well as finance. So that's the way the business runs in itself. What this gives a leeway to the business is to launch their own e-com first or e-com native NPDs. It makes them take their own budgets in terms of influencing the entire consumer journey from top of the funnel to bottom of the funnel, which means on the platform. And it obviously gives them leeway in terms of their own financial calls. So I think that is the first phase of our journey. Having said that, let me tell you what has happened in these 2 years for us. I think the first focus of these 2 years has been to just get our growth up in this channel to a good level where we believe we should be. And we have seen obviously very, very high traction in e-commerce. We will end this year at around 4% of our business in e-commerce. Yes, I know that this still not maybe the best of class, that there are obviously players who may be in 6%, 7% range, but I think that also is a function of the kind of categories you have. But yes, I personally see, if you ask me, I think 5 years down the line, e-com, even grocery skewed companies, or let's say the home personal care skewed companies, I think this business is tracking for a 10% in 5 years. That I'm pretty clear, even earlier. I mean, maybe 5 years also, maybe, a late one. It could be even 3 years, it could become a 10% business. So that is now the second phase where it comes in. Now, the second phase of e-com journey, which is starting, I would say, from April this year, is where we'll start looking into the quality of growth in e-com. And let me explain you what that means. That means definitely about growing much more premium or what we have divided a portfolio of e-commerce into 2 parts, actually 3 parts now. One is we are calling as a core, which is a brand which sell a lot in current GT and modern trade system, which contribute to maybe around, let's say, already 2/3 of our business. The second portfolio which we have identified, which is called the growth brands, which are all our NPDs which have happened in the last 2-3 years, which believe have huge, affinity for e-com, like things like, for example, Hit Anti-Roach Gel, a Goodnight Fabric Roll-On, or let's say Goodnight Naturals Premium Liquid Vaporizers. So just to give you a few examples, or Hit Racket. So all the stuff, which we're calling as the growth brands. And the third one is the future NPDs, which we are going to be having digital native NPDs. The next 2 years journey of e-com is going to be on 2 fronts. One is build all future capabilities of e-com marketing, e-com supply chain, and also e-com on-platform consumer engagement. I think these are 3 capabilities that we're building. And the second bucket that we are going to work on is quality of sale, which would mean that we would like more and more of our sales to come out of growth and NPDs. And these growth and NPD brands obviously will have a much higher future margin profile for us. And that is where, while currently our margins in e-commerce are less than the margins in a GT business, understandably so, that is where we believe over a period of maybe next 3 years, we'll try to come on par with GT. Because the focus there, if you ask me honestly, is right now not that I'm not to put out whether that margin is right now off from GT. I think there what I want to see is how do I grow my growth and NPD portfolios and premiumize my mix, because that's a great opportunity which e-com throws for you, which is not easy to do in a GT. So I think that's the role of channel in my mind going forward.
Sure, this is quite comprehensive. Thanks for that. The second thing, Sunil, I want to check was on HI. I heard you talking about a lot of innovations. The relaunch of Goodnight has done very well. We heard you on Smart Stay as well. Does it mean, you are now more confident that this category growth rates could move back to more stable and less volatile trend going ahead? And what kind of growth outlook you anticipate? And also will comment on what is the status on this, competitive landscape from the incense stick space today?
Yeah. Okay. So this answer should cover, I think, most of the HI question. So I think, first of all, this category will have its own seasonality. I think that's something which we all have to, be pretty much on the same ground, because that's the nature of the beast here. That this category is a problem solution category. It has its own cycles of mosquito infestations, which are linked to seasons. And just like a flu or a fever happens when weather changes, this is prone to weather changes. And hence, one thing which maybe from a long-term perspective, we should see these categories, that we shouldn't get too perturbed from maybe a season shifting from one quarter to another. I think this category should be seen from maybe a long-term period of what's happening over an 18-month period or so. That's my first perspective, and that I think I would request all of us to maybe evaluate this category from that lens. The second part, I think this category is really that this category has two components of play for us. One is which I talked, which is the play where we really struggled over the last 2 years of getting fair share of recruiters, which is where the incense stick phenomena happened, the illegal piece happened, and they obviously disrupted the recruitment part, which always was coming to, let's say, the branded players, and we were playing the big role in that, which obviously got hit across for all branded players. So there, I think, I would say, we have still not nailed it fully, because while they had come down a little, obviously post-COVID, I expect some of them to come back to some levels, may not be the older levels, but there I think twofold action is going to happen from us. One is that we have done a very, very strong legal and PR action in the last 8 months on this industry, and that is something which has paid some dividends to us. Having still, it's India. These people will keep on having this up downs. I think we have worked out a very strong regulatory and legal team which will be consistently at it. So I think that's one task. The second is we need to get products and answers to incense stick which will get us a fair share of category recruitment, because that is our task. And this is where I told you that in the next maybe 2 to 3 quarters, we have something lined up which we believed, while we have launched natural incense sticks already a year, 18 months back, I believe that is where we'll have some very, very strong, penetration opportunity coming our way. So that is the part on the incense stick or the recruitment part of the category. The last part is premiumization and upgrades, which I think Gold Flash is doing pretty well for us. That we are seeing good growth happening. More than the growth, I think the first part which is happening there is the seeding. The Gold Flash model is all about seeding the machines, and then the consumer comes back for the refills. So I think we are on track for our seeding targets that we set out, despite COVID breakdown. We saw the seeding targets on track. And the second piece which is going to happen is premiumization category to some very, very disruptive solutions. Maybe in 3-4 months time, maybe in 4 months time, we should be having a much better point of view on smart spray. But that in itself, I think, is a pretty comprehensive premium solution. And I think between Gold Flash and Smart Spray and the Godrej Natural, which we launched on e-commerce, I think there's a portfolio emerging for us, which is about premiumization in the category. And then there is a bottom end, which is about burning formats, which drives the category penetration. The outlook on HI for us, I think volatility is part of the game. But I think what we are looking at is at least driving high single and to low double-digit growth in this category. I think is the place where I would look for in this category.
Sure. Thank you so much, Sunil, and all the best.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, Sunil. Percy here. Good afternoon. Sunil, my first question again, sorry to harp on this, but on HI. See, there are some categories which are COVID tailwind categories and some which are COVID headwind. Now, where HI would fall, I would assume is that given higher emphasis on health and hygiene, it would be a marginal tailwind category with respect to COVID. But despite that, if I see your CY20 growth rate, assuming some number for Q4, which will not change the overall number materially, but the entire CY20, that is 4 quarters put together, which should take care of all pipeline up and down, would be approximately 5% growth in HI, which is not an exciting figure, especially given that because of COVID, the supply chains of these incense stick guys were disrupted, etc., etc. So there's been hardly any benefit at all or any major sort of change in trajectory from the earlier growth rates. So am I looking at this in a wrong way, or what am I missing really here?
Okay, so let me actually take this number piece first itself, and I think maybe this will give a perspective on the thing. Okay, if you're seeing this CY20 figure would be around, let's say, 5%, I can tell you can add 2% to it straight away, which I think is a loss we have got because of supply shortages. So let me first put it that way, that if I were to, I think in the Q2, and my portfolio is not about good night. I think there's a hit which plays a very large role. I think this number could have been higher by another 2 to 3% straight away, I think. So what I'm talking is, HI in any case would be, a high single digit to a low double digit kind of a growth aspiration, which we are looking forward, going forward. Definitely. I would like to definitely play in the low double digit pieces as a piece here. Now, this is a category which I would say is, as I said, it is not that a category which has got a huge tailwind because of COVID. It is a marginal tailwind category because the health consciousness in the country is gone up. And that is something which is going to play. And hence I said that the way you have to see this number is not a 5 kind of a number. It's a number which could have easily been on the higher single digit side of number. What we are got things right and which is giving at least me some definite confidence is that we have got our NPDs rolling out which are also looking good. Gold Flash being one, Smart Spray early days, and another a couple rolling out in maybe another 2 quarters time from now. So I think this, if I put together, I would say the expectation on HI is very clearly that we will have to drive the category growth in the backdrop of a post-COVID scenario, which is marginal tailwinds. And we'll have to do it at both bottom end as well as top end through premiumization and category recruitment. The critical one for in this definitely would be how do we get fair share of category recruitment, which has always been our forte. So I think this is where this is, and this is how we look at the category going forward.
Understood. Sunil, just to follow up on this one, there was a disruption in supply on account of Assam being shut. I understand that. But for any FMCG category, the total pipeline, including retail, wholesale, distributor, everything put together, is generally anywhere between 1.5 to 2 months. I mean, if you pick up any product on the retail shelf, the most common package date that you will see is at least about 60 days old, right? So, do you actually have consumer level lost sales because of a production disruption?
Yeah, I'll explain this to you, Percy. Percy, this shortage to us did not happen in April and May. The July lockdown, which really hit Assam, was actually the lockdown happened in between 15th July to 15th August. So if you see what was happening, this was coming after 3 months of lockdown anyway. So in between 15th March to let's say 15th July, that pipeline had run out in the country across all commodities. We all seen that the shelves of kiranas were empty by that time. That is one thing which had happened. Second piece which had happened, which at that time was, if you remember, if you can see our first quarter results of HI itself was something around 120 plus kind of growth. That time the season was extraordinarily big. So what happened at that time was 4 months of huge disruption in the kirana stock shelves, panic in the country, combined with the extraordinary season, huge sensitivity maybe towards any kind of not falling ill. I don't want to visit hospital at that time. The stocks just ran out by, I can tell you, a May and across the country. And we were living. I can tell you, obviously I can't get into every figure. I was operating on, since there was so much of a run which had happened on stocks, we were operating, and plus every factory, despite our I think our team had done brilliant in opening up all factories. There was one challenge that was continuously happening factories was some COVID case will happen in one factory or some COVID case will happen in the country, and every district commissioner was operating at his own whole discretion, and every district was taking their own call. So if one case would happen, some places will come and say, okay, I want you to take a 7-day quarantine. Some places will come and say, I want you 21-day quarantine. So in that frenzy, what happened? We were operating from hand to mouth on 2 of our formats, which were coils and aerosols. And in aerosol, I can give you more detail also what happened. In aerosol, the challenge never happened in our factory. In aerosols, the biggest hit which happened was in April to July. The largest can supplier in this country was in Bangalore outskirts. And if you can go and check the data, the Bangalore urban conglomerate was one of the most stringent lockdowns in this country saw, and that supplier did not get open permissions. So we got into struggle because, and the entire aerosol category got into struggle because we could not get the supply of cans. It was not a problem with my factory at that time because my hit factory is not in Guwahati. So the burning format got impacted from Guwahati. The aerosol format got impacted because the can supplies. And both these were happening in the period of July. So actually AMJ, I did not lose any shares. I would say in AMJ, the supplies would not have got impacted because those 2 months would have taken care of it. The pain point for us happened in July, August, September, really. I hope that clarifies the point.
Thanks very much for this very detailed answer. Second question is just sort of a query on one of the earlier answers that you had given on e-commerce. So you had mentioned because of Dunzo, Swiggy, etc., the addressable radius of a particular store goes up from 2 kilometers to 7-8 kilometers.
Yeah.
I'm a little sort of confused as to why this would be the case, because if you look at, if you are at your house, within a 1 kilometer radius of your own house, there would be at least 20 kiranas maybe. So, Swiggy, why would it sort of want to get product from 7 kilometers away when it can easily supply it from somewhere closer to where the customer is based?
I'll tell you two things are happening. One thing which has changed, is that in majority of homes, at least in urban India, there used to be this phenomenon of home delivery, which used to happen from the local neighborhood kirana who within 2 kilometers this thing.
Yeah.
So one thing which has happened is that the assortment at that time was always catered to the local taste, which has been a strength of the neighborhood kirana. Now, what has this last 8-9 months done? That because of a lot of people not wanting to stand in front of kiranas or let's say the modern trade, what has happened is, especially the modern trade phenomena, that you are now wanting much more different kind of assortment which you have got used to, let's say when you used to go to a modern trade, or which you were maybe earlier not even aware of. So what has happened is e-commerce is giving you a window into very different kind of assortments. Modern trade assortments have disappeared because you are very scared to step into a modern trade store. And your neighborhood kirana till now never had that assortment. And I can tell you, give an example. I do this sample around my own home, and I will take some names of some of the products which I suddenly started asking this neighborhood kirana, and I've done some maybe 20 such samples myself. There's a brand called Viva. I don't know whether you guys have heard of it. I had not, to be very honest, heard of it pre-COVID. It's a brand into, mayonnaise, sauces, and all color of this, pizza sauce, pasta sauces. And suddenly I saw him having huge stacks of this. And I told him, what is happening? You never used to stock this. So I asked him a question. What was your assortment earlier? He had assortment of 350. I asked him, what is the assortment you have now? He said 750. And I said, why? He told me, I am becoming one of the largest Dunzo players around my assortment. And I've done this surveys around 10-15 people around. Staying at home has given people exposure to a much larger assortment category, which is not otherwise available to them in their neighborhood kirana. B, modern trade substitution has happened. And C, there is a definite comfort and adoption of digital which is happening, that I go to just the Swiggy or the Zomato or the Dunzo app and I just press the button, and the fact is in the next 30 minutes delivery happens. Combined with this, there is a lot of local neighborhood kirana which will not have this assortment, and you are okay saying I am willing to wait 30 minutes and get it from a kirana which is 6 kilometers away. So I think this is a very clear phenomena which is there, that the catchment areas are disappearing.
So, Sunil, do you think that there is sort of permanent damage to modern trade in the sense that even when the fear of the virus and the cases drop and the modern trade stores are open fully, some people who have tried e-commerce either through this kirana tie-up or direct inventory model, whatever, they would be happy with this kind of an arrangement, and therefore some of those sort of consumers would not go back to modern trade at all. Do you think that's a possibility?
Okay. So I'll tell you what, obviously I don't see a doomsday scenario for modern trade. No way, right? It's going to come back. We're already seeing some revival happening. But there is one structural change. I would not say I would not call it structural damage. I would say there's a structural change which has happened. The structural change is that earlier maybe Indians, and I would give an analogy of saying, let's say maybe, when e-commerce happened in this country, let's say 7-8 years back, the first question I asked myself, that Indians, we are so used to trying out clothes in our trial room. We are so used to trying out, shoes in our trial room. Would we ever change our habits to ordering that online? And what happened is two phenomena happened. One is cash on delivery and one is return policy. That changed the whole traction. And the first phase of e-com structural change happened through both, apparel, shoes, and maybe the electrical appliances, The curve which never took place, which has changed in the last 12 months, is the grocery shopping online. Now, the structural change for modern trade will get impacted. The modern trade always served as a point of experiential shopping, that you would go there, that you'll spend 2 hours there. You will actually like to, move through the aisle. You will experience a few products. Plus, you look for promos, right? So it was a bit of a leisure shopping of both promo as well as experience. Now, what is happening with e-commerce is that you have got used to not the leisure part, but definitely a much better assortment and promotion experience on e-commerce. And there is that amazing convenience of the stocks coming to your footstep anyway, let's say in anywhere between 24 to 48 hours. I believe the structural changes, this will have definitely some amount of stickiness. And hence, modern trade has to invent at least one more new pillar for growth. The pillars for them were always about promotions, assortment, experience. 3, right? And experience only in some cases. Obviously, there are some stores which are only about pricing. They don't care about experience. But let's say broadly, these are 3 pillars of growth, proposition. In this, promotion and assortment are both now getting tested and has got tasted by consumers online, right? The piece which they have to change now is that is experience going to be enough to get the entire growth back? I think that will require some rethinking. And I think the change there is not about experience. The change for modern trade is going to be omni-channel now. So you would see all modern trade players would evolve into omni-channel players. I personally don't think so. If anybody does not evolve into omni-channel, we'll see same kind of growth. So I think the growth structural change for me, it's not structural damage. It's a structural change of modern trade players also becoming omni-channel. The question is, what percentage of the business will be physical? What percentage of the business will be digital? Difficult to predict. But if I am the CEO of a modern trade chain, I would say the future is become omni-channel.
Right. Thanks a lot, Sunil. That's all from me. Thanks.
Thank you. The next question is from the line of Krishnan Sambamoorthy from Motilal Oswal Securities. Please go ahead.
Yes, you mentioned that there's been an increase in the penetration in the HI category. I remember about 3-4 years ago in one of the sessions in your office, the general session, they had mentioned that the penetration was in the mid-30s. How much is it now?
No, the HI overall penetration was, when you said mid-30s, that was rural. That was only rural. So the rural penetration in India has now moved to 50+.
Okay.
Yeah. So it's around 50, you can say around 50 or 52 odd %. So that's a change which has happened over the last 2 years or so. The urban penetration was always in the range of around 75, and so it's hovering around, maybe 77 or 78 in that sense. So that's the change which is there. We have seen a 2 to 3% increase in the penetration in the last 7-8 months, and which is made by both urban and rural.
Yeah, similar to what you said in terms of hand washers. What do you think? What is the level you think would sustain? Would you think that this could, or at least until your new products start kicking in, would it come back? Would we lose that 200 to 300 bits once the sales start tapering off a bit because of health concerns?
No, so I think, as I said, I think that some part of this jump that we've seen in the last 6 months is definitely maybe because of the frenzy that may have happened in the first 3 to 4 months. But I think the rural penetration increase of HI is little COVID agnostic in my mind. I think that got to do with overall sensitivity of consumers which have happened towards, vector-borne diseases. So I expect that to by and large stabilizing at this level with a 1% here and there. I don't expect a drop, which maybe could happen in very, very sharp COVID-led categories. I don't see we'll see that here.
Okay, thanks. At the same time, what's been the experience in the 2 categories where the growth has been a bit disappointing, which is primarily the out-of-home HI category as well as the non-mosquito category. Have you seen a jump up there as well? Could some of this be used to grow what was not growing earlier?
Okay, so one maybe factual correction. Actually, I've not talked maybe about it, which is a very strong story of HI. I think the non-mosquito part of HI is a very underleveraged part of our business. And maybe when in all our conversations, some of the narrative always seems to be around mosquito part, but the fact is the non-mosquito part of HI is a very, very large opportunity in India. It forms around roughly 12 to 13% of our business of HI only. So that's a hell of a lot of opportunity which sits on the table. Indians have as much problem of cockroaches and other pests as they have of mosquitoes. And that is where the work is happening where in this last 8-9 months, actually this part of our portfolio has performed very well. So it's not an underperforming part. In fact, it's an outperforming part of our HI portfolio. So that's one thing which I want to clarify. The piece which has got hit, which is expected, is the out of home, which is only 1% part of our portfolio, or even less than that. Actually, it's actually not even 1%, point some percentage part of our portfolio, which is expected because out of home is linked a lot to school usage and kids playing out of home when they go out in the evenings, when they step out of school. That's where the moms are very concerned. And what we've seen is obviously this is almost behaved like cosmetics, that kids were not allowed to step out into the buildings for the first 6 months. The schools are still not open, but that's a very, very small part of portfolio, which is more a long-term category creation and habit change pivot for us. So that I think, while I'm obviously not happy that that's got hit badly, because that's a future growth lever. But I think that's just a temporary hit. Once schools open, once people start stepping out more, that will come back to normal. But that is a 3-year growth horizon pivot for us. The non-mosquito segment has done very well, and we hope to grow that in strong double digits, in fact.
Yeah. Even on the out-of-home, as people step out more, even if it is in their own compounds, because of the fear of getting sick, right? Isn't there an opportunity for you as well?
Very clearly. In fact, see, I fully agree with you. In fact, one of the biggest opportunities which I see as kids step out in the compound, as people step in the compound, we have to start investing in saying, hey, at least take a protection against any mosquito bite. Because the window of opportunity which I'm saying, which is coming the HI way, is that right now you don't want to have any kind of fever, or any kind of vector-borne disease right now. And that is where mothers are very sensitive about children right now. The wonderful point of HI consumer has always been about, as Indians and adults, we don't get too bothered about what happens to us. We've seen always for entry consumer who enters the category in HI also, or for that matter, who upgrades also. The two biggest vulnerable points are the birth of a child, and hence sensitive towards children, or sensitive towards older parents. The vulnerable side. And hence, to my mind, that is an opportunity which is very clearly going to come back on the table after this disruption of no schools, no playing outside, that as India is normalizing and hopefully the vaccine is round the corner, maybe in the next year with schools opening everything, and even now with people going and started playing downwards, we should see a reversal in our fabric roll-on business also.
That's useful. Just one final question on that. In the Indonesia business, how much would be the proportion of out-of-home as well as non-mosquito?
Yeah. So at this point in time, Krishnan, the out-of-home space is largely vacant for us in Indonesia. There are plans to sort of have new product launches to kind of fill in that opportunity. And beyond mosquito would be, somewhere in low to mid single digit of the overall portfolio. We got into that space with launches of cockroach aerosol solutions. And that's something which we will continue to scale up over there.
Yes, my question was more from an opportunity perspective, what it could be, right?
Sure. So I think if you look at the category in Indonesia, Krishnan, I think the out-of-home is anywhere between 15 to 20%. And if you look at some of the Asian markets, just from a comparative perspective, this would be anywhere between 15 to as high as 40%.
Understood. Thanks, Samir. Thanks, Samir.
Thank you.
Thank you. The next question is from the line of Richard Liu from JM Financial. Please go ahead.
Hi, good afternoon. Hi, Sunil. Hi, Samir. Thanks for taking my question. Sunil, actually, I have two questions. One is specific to, to GCPL, and the other one is more, more general for the sector. And, and sorry, GCPL one is again relating to HI, and I'm happy you touched upon some of this, in the remarks that you just gave. What I wanted to understand from you is that, the last we heard from you on such, analyst forums, you had spoken some fantastic things about, under the HI or what you call reimagining HI, right, which is this whole non-mosquito daytime use and out-of-home use thing, and then you have some big plans for it. I just wanted to understand your progress. I know you gave some data, about, non-mosquito being 12%, out of home, sub 1%, etc. But I remember the conversation we had earlier. You had much, much bigger plans for some of these non-mosquito related areas. If you can just give an update on what's the plan now, what's stunted the delivery, etc.
Yeah, so I think, Richard, in fact, I think the progress in the non-mosquito business for us has been pretty decent across over the last 24 months, In fact, this business has grown up, pretty much in a, high single digit, in fact, double digit this year. And there, I think two things have happened for us. One is, there we are the category. We are, there's nothing else other than hit, we are, 90% kind of shares, we're sitting on that category. So we are the category completely. And it depends a lot on how we build that non-mosquito part. So what we have done is, our aerosol business has done very well in terms of penetration. In fact, we've seen while Nielsen Kantar household panel does not track penetration of this format very well because it's very, very premium format. We have seen our own internal numbers growing at pretty strong, overall trajectory. Second piece which has happened for us is that we have just now, 2 months back, launched a mass and NPD, which we've just tested, which also is that maybe I did not mention that earlier. Just the way we've done a smart spray at which the premium end in mosquito segment, we've launched a product called Hit Roach Bomb. I mean, it's a very colloquial name that we put, a Hit Roach Bomb, which is a product we launched at 25 rupees in Karnataka right now. It's just been around 45 days in the market. The intent there is that can we start increasing penetration of anti-roach usage in India. India, still the penetration of roach products are very low. The only lowest cost product actually is chalk, which is we also play in chalk and we do reasonably well there, but it's pretty much undifferentiated commodity category. And this product has a very, very big differentiation that this actually and let me just get into little technicals. At 25 rupees, what it does is that why we call it a bomb is that it's a nest buster. So this product, once a roach eats it, it goes back to the rest, the whole nest gets busted. So that's the product that we've launched. We obviously are test marketing it, and actually, this also tells about a journey that we have been launching this test market even during COVID times. So I'm very hopeful that if this product starts showing some traction for us in terms of consumer education and penetration gains, then this is something we could take towards building the category over the next year in India. And that's one progress which has happened, that we never had in the roach and other power segment a mass product. And that is a product which is now getting test marketed. I think so that's on the journey. On the other journey, if you recall what I told you, that the two pieces I've already talked, I think Gold Flash is the way of premiumizing. And there's a smart spray which I think could become a very efficacious solution. And the fourth part, which is the top end of the piece, is we have launched a 100% natural Goodnight electricals and a Goodnight fly spray, which is primarily for e-com.
And is out of home, still you think that's a great near-term opportunity? And also when you talk about high single-digit and low double-digit growth for the category, how much are you banking upon these non-mosquitoes to deliver that?
Okay, I would expect the non-mosquito category, since that is smaller for us also and it has huge opportunity, to be the lead driver. In fact, that category segment I would expect to do a high double-digit growth.
Okay, and is that an important contributor to this high single digit, or this high single digit, early double digit is irrespective of the non-mosquito stuff?
No, I think it will be a mix of both, right? Because finally for us, both are pretty important brands, Goodnight and Hit. And while Hit has a play in both mosquito and non-mosquito, Goodnight doesn't have a non-mosquito play, right? So, and that's the way we have created and crafted our architecture deliberately, that Hit would be more the non-mosquito driver and Goodnight would be the more, the non-killer brand, So I think I see the growth happening from both. One will be led by very high double digits, where we will actually drive more and more penetration of the category, because that's very small right now in this country. Globally, aerosols are a very large format. In India, aerosols have not become so large a format because India has seen liquid vaporizers becoming very big. Globally, there are no liquid vaporizers so big. So India is structurally different in terms of HI. So I think there's a huge opportunity in terms of building the non-mosquito segment, A, through aerosols itself, and B, through mass solutions. So that will drive high double digit. Plus, as I said, the mosquito piece will have to do its own agenda, which I've just talked of.
Sure. And Sunil, would love to hear your thoughts on on this whole digitization of Kirana bit, right? Which which Jio is spearheading, especially in the context of how you think equation with brand owners will evolve over a period in time between the distributor and the brand owner. Thank you.
Yeah, so Richard, this is a piece which I talked in pretty much detail. I think last week at one of the CI panel. I don't know whether some of you have gone through that. So I think this one thing I want to put on the table for all people in the industry is this is going to be a piece we'll all have to navigate very fluidly, because it is evolving like crazy right now. We have models like Udaan happening at one stage. We obviously have JioMart and Amazon and Flipkart wholesale happening parallelly. So I think the disruption of Kirana is, I would not say disruption, I think the evolution of the GT stage, that GTM in India is happening on both, traditional Kirana, it's happening on B2B, and it is definitely happening in modern trade. So I think these pieces are somewhere becoming very hazy. One thing which I'm pretty sure in terms of brand owners, that one piece which we all have to be ahead of the curve, and I'm keeping e-commerce out because e-commerce I think is one of those glamorous pieces of the pieces that all we love to talk of, and we all are investing in that. I think one piece which the brand owners have to be very ahead of the curve is digitization of Kiranas and how we support the new Kirana. And I think three things which we are planning to do, which is what I talked in my presentation, is one is I think we need to support the Kirana to become more tech savvy with our own supply chain. So that is where one change which will happen is we are re-evaluating the role of distributor in future, what it will be. It's a very large theme in itself. I can't obviously talk here, but I'll just tell you the headline. What is the role of a future distributor in supply chain in a digitized world is something which is very important. It is not going to be the same which it was till now. The future distributors will have a very different digitized role. That's one, because that will lead to a very different service level for the kirana. Because the future kiranas, digital kirana will expect a very different service level. Second role will be the assortments which will sell through these digital kirana, which is linked to that other topic that I talked about, the catchments changing. So the assortments will no longer be limited to the local neighborhood consumer profile. The assortments will become more and more premium. I think that's what will happen. So the second part which brand owners have to do is that we'll have to keep this a very nimble, agile supply chain in mind, and also we'll have to do a lot of science, which we are already doing, and we can have a separate session on what we are doing in terms of GCPL, of building a very artificial intelligence-led selling of planogramming and assortment in kirana stores. And the third piece definitely will link to the return on investment in commercials, because this will be a different kind of commercials which will pan out in both omni-channel as well as in kirana. So I think these are three places that brand owners have to be ahead, and that's the work we are doing right now.
Okay, very useful. Sunil, thank you so much for doing this. Thank you.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Yeah, hi. Good afternoon, and thanks for your time, Sunil and Samir. So firstly, on hair color, I think you indicated that there was some impact because of the discretionary nature, but a large proportion would just be basic coverage, right? I mean, the basic hair color. And here I would expect that you would see meaningful sort of pent-up demand as people start getting out, going to offices, as hair salons open up. Is that something that's playing out in 3Q, or do you expect that to play out in 4Q?
Yeah, so that is something which we are clearly seeing signs. And when I said I'm seeing almost like maybe a V shape has happened in hair colors, which I was pretty much surprised. So I think this happened because of two phenomena. One is I think we have played it pretty strongly, because I think our marketing mixes which are falling into place pre-COVID have actually put us in a good shape. Secondly, I think we also got one benefit that since we are a company which is compared to our competition, we are multi-category company, and a lot of our categories were essentials. We were able to actually put our whatever little sketchy distribution, but we were able to get the last mile up in April itself. While many of our competitors, which were primarily discretionary category, could not do that. So I think we got advantage of that as well. It's translated into share gains. And the third, I think clearly there is as India has opened up, there is some kind of I would not call it revenge consumption right now, but maybe signs of people wanting to make up for the lockdown, and they want to celebrate a bit more. And I think they're definitely wanting to, indulge, which is playing out in hair colors.
No,
having said that, how much it will sustain is a question in my mind right now. I'm not very clear.
So what would be the proportion which is basically non-discretionary and discretionary within hair color?
Sorry, what is the proportion?
Which is discretionary and non-discretionary within hair color, or the other way around?
It's a very difficult question on here, because if you see, we sell crème of $30. Now I would not. I would say the whole category by and large, if you see, has a discretionary element to it, because when you're in lockdown, whether you're a 20 rupee powder user or whether you're a 30 rupee or a 37 rupee crème user, which are various points in a category, if you were to just step back and say what is the cost of $37 or 30 rupees, it's a big deal. You will say there are many other food products which will be expensive than that. So I think it is not that. It is just that is this category you evaluate as saying, can I do without it? And hence, this is where that category falls. That all the triggers for hair coloring are social. That when you go to a party, when you step out, when you're going on weekend somewhere, when you're seen by others by and large, whether relatives are coming home, you're going to relatives' places. So that's why it is discretionary in nature by and large, I would say.
Fair enough. So, and another way to put it, what proportion would be then the 20 rupee powder or lower?
I'm sorry, Aditya, we just missed out. You're not very clear to us.
No. So what proportion would be the 20 rupee powder versus crème of the overall mix of hair color?
Yeah, for us, this would be, the powders versus crème for us would be roughly
40,
half. Yeah,
40, 60. 40, 60. 40 would be powder, 60 would be crème. Right.
Fair enough. No, I think that's very clear. And secondly, in terms of this Good Night spray that you've launched, is there any risk of cannibalization to your existing to the?
We have factored that in. In fact, that is one of the reasons we are doing a test market. Okay, that's one of the reasons which I want to check out. That obviously there will be some cannibalization, but what we have seen from all our research is that our net gains will be much larger.
No, very clear. And lastly,
overall, it will lead to a huge amount of net gain for us. That's one thing. But I am okay with some cannibalization because I think this is a very superior format. I would not be bothered about it. I think overall will gain a lot.
And you said it's a more premium format, right? Overall.
Yeah, it's a premium format. Yeah, it's aerosol. It's a no gas aerosol, and it's a aerosol format which is instant, no gas, and 8 hours. I mean, no aerosol format in the current. There's no. Current aerosols of it are gas aerosols. And they have instant SOS effect which lasts around 1.5 to 2 hours. This is a no gas formulation, water based, instant effect, lasts 8 hours.
Right. Yeah. And lastly, in terms of you mentioned also for floor cleaners and toilet cleaners as potentially being a new category, but is there a risk that as modern trade comes back, that these are sort of the first categories that you see private labels come in? From modern trade, especially the likes of Reliance, we've seen them being very aggressive, and is part of the reason these categories are doing well is modern trade has been pretty.
These categories already have in these categories, let's say floor cleaner or toilet cleaners, or for that matter hand washes. I mean, they've been around now for so long. There will be only two players there. There is one large market leader which is 60 plus, and then you see modern trade channels. There's a lot of private labels which come in there. The biggest piece in this category, if you ask me, which is missing, is that there's no strong number 2 in general trade, right? Or for that matter, no strong number 2 in either e-commerce or modern trade also. Because consumers, what we believe is going to happen is people are now going to be more and more having trust in brands in a post-COVID world. That's another change which is going to happen. That earlier if I was in, especially in hygiene category, which have got to do with safety. If earlier I was okay, I think any floor cleaner would do. What I expect hopefully in future would happen is that I'm not going to be okay with any phenyl. Or I'm not going to be okay with any private label. I would say, I'm okay paying some premium, but I want the trust of, complete germ protection or complete, safety in terms of hygiene. And I think that's somewhere where even if modern trade comes back, I don't think so that's a very big variable. I think there's enough room there overall to get the brands moving.
I understand. And just following up on that, I mean, is there a risk that we could be overemphasizing the value of the brand in a sense that, obviously we've seen modern trade get disrupted quite meaningfully in the last 2-3 quarters, and traditional trade, obviously the top 2 or 3 players benefit because the consumer doesn't have the whole bouquet of brands to look at. So could that be a reality as well?
Sorry, just explain me. What do you think is reality? I just didn't understand the last part of your question.
So in modern trade, obviously the consumer has a choice of looking at multiple products on a shelf. In traditional trade, you do not, because you ask for a brand or maybe get a visibility of 1 or 2 brands. So is that one of the reasons why the brands are doing exceptionally well in the COVID period, and as modern retail comes back, maybe some of these brand trends that